Welcome to this Fireside Chat. I'm JT Engstrom. With me is a special guest, Jason Bass of Harris Williams. He's the managing director and co-head of the transportation and logistics investment banking practice there. Their team does a phenomenal job in the space, providing opportunities for operators to sell their companies, merge with other players, expand operations. They have a lot of deal flow in the space and have a phenomenal record and reputation. Jason, it's a pleasure to have you with us. Really looking forward to having this discussion.
JT, thanks for having me on. Really looking forward to it.
This is quite an interesting year for us to be sort of doing a post-mortem review, 6 months in, if you will, as to what the investment banking space looks like in transportation and logistics. I know historically you guys have been very, very active in asset light and even asset heavy transportation. Can you talk to us a little bit about, given your breadth and depth of experience, which is, you've seen many cycles, this year is an anomaly in the sense that it doesn't really fit into the framework of a typical cycle, quote unquote. Can you talk to us a bit about what it's like managing and building deal flow in a pandemic that also overlines with an energy crisis, which is pretty unique combination?
Truly unique circumstances as you lay out there, and it's big news if deals get done or have gotten done over the last half a year, 6 months or so, and having been fortunate enough to play a leading role in a lot of the marquee transactions that our industry saw within the logistics space from 2017 all the way up until kind of mid 2019. The last 6 months have been challenging for sure, and so we've been spending our time dialoguing with chief executives, with private equity groups that own companies in the space, really sort of planning for how we might position some of those companies going forward, particularly when we start to come out of this pandemic deal-making environment that we're in. What are some of the tactics that we need to use to best position companies who may be seeking an exit or a liquidity event once things do improve? You made reference to cycles. Certainly we have seen M&A cycles, several of those in my career now. But what's interesting about our industry, and you guys know this, is that we also have freight cycles that sort of work around those recessionary economic cycles. And so even in the face of a difficult freight market, we've still been able to make some deals and find some great combinations out there. We saw that in the last freight recession in 2016, and coming out of that, there were a lot of great deals made in 2017. We were fighting the freight markets, as you know. We're really beginning in the late fourth quarter of 2018, all through 2019, which was just really tough sledding for a lot of brokers and forwarders and carriers. And so we thought we were about to recover from that, and then the pandemic hit, and certainly in a period of uncertainty, none of us could have planned for something like this, and so we're seeing some companies really write some great stories about how they were there for their shipper clients, during this period, and we look forward to telling some of those stories coming out of it.
Yeah, it's a really unique and transformative period of time, talking about not just the freight impact, but also the health impact, and how the health impact impacts business in general. And getting deals done typically requires a lot of face-to-face contact, also a lot of email and phone, but nonetheless face-to-face contact, which, given this specific period of time, is sort of a unique challenge to be dealing with. I would like to think that going into the end of 2019, whatever deals you would or wouldn't be looking at, while they may be on hold or on pause or waiting for normalized financials, I would anticipate a bit of a snapback in either the back half of the year or 2021, where issuers of deal makers or liquidity providers seeking to get things done might then take the opportunity to come back to market.
For sure. I mean, you hit on some great points there. I mean, if you think about pipeline, and missed opportunities perhaps to seek a deal in 2019 and thinking you were going to do that in 2020. If you're a private equity group, sitting on a mountain of capital that needs to be put in play, and it's been quite some period now where you haven't had those opportunities, and so the pent-up demand, the deferred nature of transactions, we do think that those, they will happen. It's not like they evaporate.
Right.
They're just out to the right. And the conversations that we're having with buyers and sellers, and strategic buyers and sellers as well, not just financial oriented, the conversations have gone from over the last 90 days from will we ever to when can we and how. And I think it's as a deal intermediary, someone who really is a professional in engineering processes in which to maximize sellers' returns in a situation like that. It presents a lot of really great, cool challenges that we need to meet on how we do engage with buyers via video conference or by phone when we can't do it in person. And we think that type of activity will start to increase over the next couple of months. Will we see some transactions towards the back half of the year? I think we might. We certainly aren't going to see the pace of deal making that we've seen in normal, regular way M&A markets, but I think we'll see a handful. I think there'll be some notable ones as well. But I do think, as you note, 2021, we'll see much more of a rapid pace, and that's something to really look forward to for all of us.
Yeah, there could be a lot of great headlines in 2021 thinking about, to your point, pent-up demand. And you made another comment in there about, dry powder, readily available capital. And I noted in my previous life as a banker that some of these private equity firms, of which there's a lot that would be happy to transact in transportation and logistics, sort of had a first world challenge of they had done so well with previous investments that the fund size grew, they continued to raise capital, and as a result, their targeted equity check size continued to trend upwards. I wonder with this transitory period of constrained deal flow, if that doesn't create a whiplash effect whereby these financial sponsors are seeking to put that capital to work, and perhaps that drives up valuation multiples a bit, which could create a really beneficial cycle for those seeking liquidity events, and might actually incentivize some operators to really think much more strongly about going to market. What are your thoughts on that?
Absolutely. Dry powder, by most measures, could be over $1 trillion. And as you note, there have been some really great returns generated by, logistics companies that, in our space. And we're seeing a greater number of private equity groups and family offices who are seeking opportunities to put that capital to work around supply chain and logistics, which is very exciting. Same time, way more supply of capital, way more demand and supply of capital than we do supply of great companies. And so rather than talking about COVID discounts and hey, the M&A market's on its ear and I'm going to go seek value in my investment, there's a chance that better performing mission critical companies could be worth more, could be valued at a higher multiple, sort of coming out of this in the recovery. And so, as you note, sellers who have perhaps, toyed with the idea, maybe had a couple of conversations with bankers and lawyers about how do I do this, but then, maybe not be willing to pull the trigger because of some, thoughts around value. Maybe value wasn't oriented in the way they thought they might have for their company. That conversation might be very different in Q4 2020 and in the first half of 21. So we're anxious to have those conversations and to really start this valuation discovery process, which I think will take some time. And I think ultimately, because we have so many great companies in logistics, that the sellers will be the ones that benefit from the scarcity value.
Yeah, no, Jason, as we think about heading into the back half of the year and into 2021, what'll be interesting, and I'm very interested to get your perspective on as a market maker, is how the market philosophy will interpret the financials for 2020. whether this whole concept of EBITDA plus C, a COVID adjustment, makes sense, and or to your previous point, if companies that had relatively outperformed in the first half of 2020, if they might actually find themselves now getting premium valuations relative to normalized earnings, because buyers may interpret that as strength or stability in their model.
Yeah, it's a great question, and it sort of the answer to which we'll find out as we start to bring companies to market and have sort of this valuation discovery conversation. But I will say that we have talked to buyers, both strategic and financial, who are thinking more about looking in the rearview mirror and analyzing 2019 and how the company performed and was positioned in that period, and then looking forward at 2021 and thinking about positioning coming out of COVID, coming out of a recession into an expansionary market. How well are they positioned, both from a customer base and a business model perspective? And then 2020 is more of a qualitative discussion and less of a what were your earnings and let me apply a multiple to it type discussion. 2020, as you say, is going to look very odd when you have a Q1 that may have performed pretty well or maybe flat to Q1 19. A Q4, which in some cases may be a growth quarter for some companies, but Q2 and Q3 are going to look rather ragged, for some companies, both at the revenue line with missed opportunities and closures, and both at the expense line because so much money had to be invested in companies to move their workforces remotely, to build PPE inventory and the like, and so there will be large buckets of add backs. I think financial investors and strategics are certainly going to understand, but there's going to be a very detailed conversation around what's short term, what's going to last. Have you taken cost out of your business model that you don't need to put back in? Are there changes to your business model that you made during 2020 that are going to change your margins going forward? And how do we incorporate those into our financial analysis and ultimately our valuation? So it will be, there'll be some really interesting negotiations that come out of that. And I think, as a banker who, represents sellers, it's going to be a challenging exercise, I think, when we try to get value, for some of those add backs. But we really do want to focus our buyers of the great companies that we represent on how well positioned they are coming out of this, and how 2021 is going to be an opportunity in a marketplace where earnings power for some of the better 3PLs will be better than it's ever been. And that's where we think we're going to find the best valuations.
Yeah, that's right. And I think that really unlocks the opportunity for you to really reveal the breadth and depth of the value that you guys offer to the market, because making the market, finding the market, determining valuation equilibrium is really not a math exercise at this point in time. It is really a matter of being disciplined and determining where the market actually exists and then trying to drive a premium valuation to there or perhaps above and beyond there. And I do expect that the back half of this year in 2021 should be a great year for deal making. And I think a lot of people would be very excited to be able to work with you and your team. So with that, we're running out of time. We're going to have to close this up. Jason, thank you very much for your time. This was very enlightening. And if anyone would like to get in touch with you, I'd be happy to pass the conversation or contact information along. So with that, Jason Bass, Managing Director and Co-Head of the Transportation and Logistics Investment Banking Practice at Harris Williams. Thank you for joining us. I'm JT Engstrom, and have a great day.
Thanks, JT. Great seeing you.
You too.